Hey, how's it going, everybody? I wanted to do a video on how to find a great company without having any technical or additional skills. Even if you do know how to read a balance sheet, these are still kind of some of the first considerations you should look at when you want to look into a company to see if they have good fundamentals as well. So let's go ahead and just dive right in. So the first thing is to find a company or market that you actually believe in personally, because you're going to know a lot about it. You will have spent time kind of understanding a specific company or a certain market set. So you've already done a lot of good research and legwork to see, which brands or who does what or who's the front runner in that potential market. So whatever that may be. And then once you kind of find the leaders or the ones who have a nice niche or something like that, then you can start diving deeper into their actual fundamentals. Um, but so like this concept kind of works like if you're a sports person and you really like watching a bunch of different types of sports, then maybe someone's going to change the branding for the gear or something like that. Like that a change is coming, and what you need to do is put on your investor goggles when news or change is coming. So like, hey, this is the front runner. This is happening. This catalyst is occurring. How do I capitalize on it, right? So it's just everyday kind of life stuff, your interests, your beliefs, and things like that. But you're going to look at it in a different light. The next is to look at a company's culture. So you can use resources like Glassdoor.com. I'll post that link in the description to get kind of insights on a company. But basically, the culture is how it treats its employees. How do they deal with environmental issues? How does it treat its customers? All of those things give investors kind of confidence in what the future value of a company is going to be. Because if the employees aren't happy with where they work, then the overall company performance is going to go down and stuff like that. So company culture is a big deal. If you have employees who are very happy with where they work and their bosses and everything like that, they're going to work harder. Therefore, the company is going to grow more efficiently. So it is a big factor. Visionary leaders. So you might know this automatically. This could be the CEO or the coach of a team, or anything that involves an industry. If it's a smaller store or a smaller company that only has a few locations, you may know one of the managers. And so a manager at a location in a small company like that plays a big role. So whatever that may be, visionary leaders, right? So a top CEO that nobody wants to do business with is not going to be as successful as a CEO who has tons of friends and everyone really likes them. There's a lot of positive feedback about them. So if you just already know that naturally because of your interests or whatnot, or if you have to look into it a little bit, it's definitely something that you need to consider, because top leadership is going to affect how the business runs. All right, next is the competitive edge. So once again, you might know this just because of your interest in whatever market or company that we're talking about. But you need to find the companies with the competitive edge, because those are the ones that are going to grow. So if you have 10 companies, developing chips for computers, well, which one has the fastest chip, or which one is, the furthest in research and development for the next stage chip, or whatever, right? Or you can apply that to any market or any concept. Like, who is the leader, or who is about to become the leader because they're developing something. So who has that competitive advantage? Who's got that niche that no one else can fill? Stuff like that. So if you're talking about a topic that you like, and this one company always pops up in your head because you love going there because they have this one thing, that's a competitive advantage. So once again, put on your investor goggles and look at it in that light. All right, the next is word of mouth. So like, let's say when Uber first came about, right? And a lot of people didn't know about it, but then it started spreading through word of mouth. Everyone's like, hey, this app is really great. It's super easy to use. So Uber started somewhere, and then it eventually grew, primarily through word of mouth. It wasn't just, online ads on websites. So a lot of people were saying, this is great, this is great, this is great. So if you're starting to hear that from friends, coworkers, or family, or whatever, look into it, right? If they're like, oh, this new company or this new product is so amazing, it's life-changing, like it's making my life easier, and eventually you think, hey, everyone might own this someday. Well, figure out which company sells that product, or what company or parent company is a holding company of that subsidiary. Whatever, do a little bit of research. All you have to do is just Google it, you know what I'm saying? You can find the company. And then, once again, if you know how to deep dive, then you can. Next is growing industry. So long-term investors can take advantage of new and growing industries. As far as figuring out when to invest, that can be a bit tricky because if you're too early, then you might not be able to see who has that competitive advantage. If you get in too late, you could possibly buying overhyped stocks, and then there could be a dip occurring. But there's always a new growth industry, or there's always an industry that's growing faster than the others. So who's the next big fast food chain, or who's going to be, or are we going to be driving more electronic cars in the future? How are drones going to affect our everyday life? Which company is a large corporation going to start buying drones from, or are they going to start making their own? Like, once you see something that could potentially be very big or life-changing for an entire country, you have to see who's going to capitalize on that. And those are the companies we want to invest in. So, like I said, none of these things take technical skills. You don't have to necessarily look into a company's balance sheet to fulfill all these requirements we just kind of talked about. But if you put on those goggles, those investment goggles, and look at all of these factors, and then submitted a report like that to someone who can read a balance sheet, that's a great research pairing where you've done a lot of the, top layers of fundamental work, and then someone else can dive into the books and look at the company's balance sheets and stuff like that. So if you don't have the technical skills just yet and you want to help out, this is definitely the way to do that, to start pumping ideas into the investment club. So if you guys have any questions on those things that we talked about, or if you need clarification, definitely let me know. But other than that, thanks for listening.